Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Get ready for another short-term rental show, but this one is going to be a little bit different as we explore unique strategies for short-term rental profitability with my guest, Michael Chang. And we do talk a lot about arbitrage, but we also talk about, I would say, non-traditional strategies that you might not expect. We're always talking about experience and how to go big, but there's also a middle ground where location and experience and everything around it meets. Stay tuned for this episode. It's going to be a good one. Let's go. This is episode 162 of Zen and the Art of Real Estate Investing with my guest, Michael Chang. Michael is the co-founder and partner at TrustBNB Vacation Rentals and TrustBNB Capital. He's based in New York and owns and operates a portfolio of short-term rentals in Philadelphia and the Smoky Mountains in Tennessee. Michael, welcome to the show.
Jonathan, thank you for having me on.
Yeah, I'm excited to talk to you. I really like how short-term rentals have become such a thing. But thinking back, when you were younger, was real estate of interest to you as a kid or growing up?
Candidly, real estate, it was interesting, but it was never really accessible to me as I was growing up. I was an immigrant to the U.S. I moved here when I was 4. And my construct of real estate was, when my family bought our first house to live in, we lived in my brother, my dad, and I, mom, we lived in a spare bedroom from my uncle's house for the first 3 years we were living in San Francisco.
Yeah.
And when we bought that first house, that was where, it's like, oh, wow, like you own a place and you could raise your family there. And that was my first, like, oh, wow, like this is really cool. This is something that is worthwhile. It's a worthwhile investment, both monetarily and, just from a personal perspective.
Yeah. So financial end, you can see like, okay, this is a strong investment. But when, as your career progressed in another area, did you start thinking, wait, I could really monetize this into something that could be more than just, a house that we live in?
I wish I could say I did, but I did not. So my background is very traditional. It was like an oddly barbell, immigrant mentality, and I was an investment banker. So, grew up where, my parents saved, and it was like you saved cash, and you always wanted the optionality of cash. They were too scared of the markets. They bought the first house, but they never bought anything else. And then they go into finance, and then you see all these big numbers. I was an M&A investment banker at Citi and at Merrill Lynch in New York City for 10 years, and I was just focused on my job, and that was how I made my money, was focusing on the job. I never really thought about investing. Investing was, stock market, 401k. I didn't really understand the power of investing in real estate, until I left the industry and, met my girlfriend and wife. She was really a big, very, very passionate about real estate. And she was trying to figure out kind of what to do.
Yeah.
And we kind of put our brains together and was like, okay, well, let's see if we can figure something out. We fell backwards into short-term rentals.
Yeah, that's awesome though, because we've had a lot of first generation and second generation family people on the show whose families weren't necessarily against real estate, but they wanted them to follow the traditional path: lawyer, doctor, banker, something that's solid, derive an income. But all of them eventually fell into real estate because it's this asset class that you can build on while you still are doing the W-2, and then hopefully you can get out. What was the point where you and your girlfriend, or when she became your wife, where you guys said like, okay, let's start to put this into motion?
Well, we launched our first short-term rental December 27, 2016 in Queens, New York, Elmhurst, New York, if folks are familiar with the Queens suburbs. It was a very typical 3-bedroom 1.5 bath apartment that I rented for $2,500 a month. And we, by monthly, we were grossing over $10,000 a month of revenue. After expenses, we were probably clearing $5K.
Wow.
And you didn't need to be an investment banker to, put two and two together and say, hey, there's a business here. So, we got married. My wife kind of left her job shortly thereafter, after we probably had like 6-7 months of operating experience, saying that, hey, like if it's, and then we hit high season in New York City, and the numbers were even more crazy. I don't want to kind of give crazy numbers out there, but it was pretty, the numbers were very meaningful. And we just said to ourselves, look, she was working at Kate Spade, and, it was like, if we had a few of these, like, we get you out of your job. So that's what we did. She quit, she focused to do that full time. And then I had, my salary was, higher than hers. So it took us a few more years for me to eventually exit. But I would say, leaving wasn't just the cash flow, it wasn't like, okay, we had hit a number where we could replicate the income we were earning from the jobs. It was more also a mindset shift where we said, there's just a lot more opportunity here. And if we could really focus and double down and build some real subject matter expertise in real estate broadly, short-term rentals more specifically, we would have some advantages here and be able to compound our net worth over a longer duration.
Yeah, so it sounds like you made that proof of concept, and Elmhurst saw like, wow, okay, if we 10x this could be really good, and then just took action. But Queens is an interesting place to start because it's not, people think short-term rentals, they're thinking, beach towns and things like that. Did you start there just because of proximity? You were near there and it was an opportunity that would work?
We were near there. My wife grew up in the area. It was near, so it checked a lot of boxes. We had some family around there. It checked a lot of boxes. And it was really just an experiment, really. It was less than a $10,000 investment. It was more the time, candidly, than it was the actual capital.
Yeah.
But, we had seen some people, we had heard some rumors of people doing it and kind of the numbers they were doing. This was a day before, these were the days before all of the data platforms did not exist, like AirDNA, where you can get some real insights into how people were performing. Those are the days where it was all kind of anecdotal, secondhand. And I guess, to be fair, that's kind of when the opportunities really exist, when it's not so institutionalized or broadly talked about. You as the investor, as the principal, have to have that eye to see like, oh, hey, there's something here, and then double click on it.
Yeah, being ahead of the curve probably helps set you up well for now, because you could figure out. The data that we can get now is helpful, but also I think a tool for analysis paralysis for a lot of people, because you can just keep combing through, like, where can I go? Like, all these markets look good, and then you have to comb through. How, as you started to grow, did you figure out where you wanted to grow into?
When we started, the first goal was to generate enough cash flow in order to exit out of our respective jobs. So it was very focused on, so when I talk about that first apartment in Queens, you'll notice I said $10,000, right? Because all I did was buy the furniture. We used a strategy called rental arbitrage, which
I was thinking it was an arbitrage.
It was just a fancy way of saying, you rent an apartment, and with the landlord's permission, you can re-rent it on Airbnb, VRBO, etc. And you earn the difference between the short-term rental income that you're earning and the long-term rent plus expenses that you pay now. So it was very focused on that, kind of standing that up. It was obviously a lot more scalable too, because, a down payment on a house and a mortgage, just wasn't going to be that sustainable in the beginning. Plus, we wanted just to make sure that we were actually good at it, that we could actually do this and scale an organization. So that was where we really focused the time on. Today we have 35 right now, 28 that are rental arbitrage, 6 that we own, and then the 7th we own, where I'm sitting in now, getting set up.
Yeah, well, let's talk
other boxes. Go ahead.
Yeah. Let's talk arbitrage a little, because it's interesting for people who don't know. Of course, you said it, you're going to rent the place and then you're going to turn it into an Airbnb. The landlord's happy because they're getting what they want and you can make extra off it. When you did that first one, did you disclose to the landlord, hey, I'm going to do arbitrage at the time? Because it was 2016. I don't think that people were really even calling it arbitrage then.
No, they weren't. But it was in a building that so this landlord lived right very close by. So we wanted to be transparent and say, this is
Yeah.
like, we're not going to be living here. This is kind of what we're doing. That apartment had been on the market for a while, and I think it was slightly overpriced. I mean, they were trying to get up, higher than what most of you would have paid. And, we had a just different use case versus the typical long-term renter. So he was fine with it. And that relationship was a very good one for us. And I always tell my students, folks that have asked me for help to help them train this business, you always want to be very transparent in what you do. Like, there's no way to start a business, underhanded. Don't tell the landlord what you're doing. It's just a recipe. You can make a little bit of money, but you can't scale a business that way.
Yeah, and you'll always be worried that somebody's looking over your shoulder and it's going to fail. You're going to get found out. It's not a foundation for any type of business. So that's why I asked. I think it's really important to know even back then, you're like, hey, this is how it's going to work. And it makes sense, though. The way you described it, it almost sounded like buying on seller finance, because you're saying like, hey, I can pay a little more because how I'm going to use the apartment's going to be different. So I can pay up a little, which you're not going to get. But this is what I'm going to do for it. Just like in seller finance, I'll pay your price, but I'm just going to make it, very low down payment and very low interest, So there's a really good scale to that in building the relationships. Then so the first one really helped you set up the proof of concept before you, expanded out into other areas.
Yeah, I mean, we knew exactly kind of what would work, right? And like your framing of it, it's like seller financing. It was like your price, my terms, right? So
yeah,
So it was good, because we had a proof of concept there. It was someone that was known in the neighborhood. So, we could scale from there and continue to build our presence in that kind of micro neighborhood that we knew would work, right? And then, we could be able to leverage the operational resources like the cleaning and the maintenance staff, laundry, because they had to be sent out every single time. So, it was operational headaches that we had to solve. And, this is 2016, 2017, right? This is before the technology is much better now. Back before it was, you really had to MacGyver a bunch of things together to get things to work.
Yeah, absolutely. In 2016, when you launched the first one, did you have any idea who your like client avatar would be? Like who would be staying there in Elmhurst on a short-term rental? Because there wasn't the data out there to really tell you about the viability of it. But then over time, you kind of figure out on each property what avatar you're really looking for.
Yeah, no, we didn't have like a key data to tell us like what our feeder markets were and if they were up or down year over year. I mean, the data now is it's just a different class. And for us, it was like, look, it's a 3-bedroom apartment. Hotels rent for this much in Manhattan. This is 25 minutes away. Subway's a block away, so this is going to attract a budget traveler. But with the rent, if we rent out for X nights at this price, like we'll make money. And then, we were completely wrong, of course, because it rented out for a lot more than we thought, and it was always booked.
Yeah.
But, I think that speaks to a point that, and I'm sure you talk about, and I always try to tell people and emphasize to people, all the research, all the talking to people on the meetups, all that stuff's great. You're harnessing information. But yeah, you get paralyzed by it, right? Like until you actually do something and it's like real, the numbers are yours, right?
Yeah.
Because the numbers you see on Airbnb, it's a different operator. Like we could be in the same house, but Michael Chang can operate at a different level than Jonathan Green, right? Like it can be two very different numbers. So like what can you as the investor do with that property? And you know what? You're never going to know until you actually do it.
Yeah, and you have to get a little of that trial and error to build the confidence to know, hey, I can expand to 18 arbitrages, because that sounds like a lot. Arbitrage is difficult, but I think once you know how to do it, you've separated yourself from everybody else who's like the fumbling first timer who doesn't even know how to explain it or tries to kind of sneak it in there. How have you continued to, now you must have a really strong presentation on why it works, but what are you looking for when you're looking to find one for arbitrage? Is there something specific that you're looking for, like days on market that we talked about before?
Yeah, I mean, like we no longer operate in New York post-COVID. COVID just kind of knocked everything out, so it didn't work anymore. And the regulations have changed and are now enforced just much more consistently. So we operate in the city of Philadelphia. It is it's, I would say, reasonable regulations. There's a permitting process, there's zoning. So there's a pathway to actually be able to operate in a compliant way, which we like. So that's kind of number one. We look for markets that have a stable regulatory structure that is conducive to business, but like reasonable, but conducive, right? That's first. Second, we focus on urban markets. So we like being, 10 minutes outside of, outside of the city core. We don't really want to be in the class A. That's right in the middle, because those are usually overpriced by young millennials that, have their first jobs and they're willing to overpay for the amenities. We identify certain buildings that are close enough, have certain amenities that we know will work well. So those are the buildings so that's kind of the buy box that we have. And we have, look, and we, to your point about operations, what we've learned is, at least for us, a better way to scale is just going to larger multifamily buildings. We have 10 plus units, and so we have 28. So we have 10 plus units in 2 buildings.
Yeah.
2 in a third building, but we're continuing to grow there. That's our kind of growth project. But, we have 10 plus apartments in a building, then you're able to get some of the scale advantages that a hotel enjoys, but without some of the operational overhead that they have to take on, right? So that works really well for us. That has historically worked well for us.
Yeah, and having clustered apartments always gives you options in case something happens in one of them and you need to move someone around. You have options in booking, right, when you have other available units in the area.
It's true, although we're generally pretty booked. So we had an incident. The roof leaked on one of the units. It ruined the carpet, but it's also smelled because it was so hot. This is, It's July 3rd. We weren't able to move them anywhere. So we had to just cancel the reservation and, help them kind of get rebooked. But luckily we've been able to keep our occupancy rates up. And I think a lot of it's just like the market, I always kind of tell my students, like, it's the market identification part in the beginning, like really know where you're starting, right? You leveraging AirDNA, leveraging data, really making sure that the market that you're in, the sub-market that you're in, has really good supply and demand dynamics, right? Because that tailwind's going to wash away a lot of those beginning mistakes, right?
Yeah.
If you pick a bad market that's contracting, you can be the world's best operator. It's going to be painful for you. And if you're new, likely more pain.
Yeah, no, Philly's, a very interesting market because it's so block by block. Obviously, when you get into like city center, it's different. You kind of know what to expect. But I think people have been a little scared off from trying it there. What do you think your success principle? I think what you said before about knowing the regulatory structure is really important, because I wouldn't say that Philly, like, they're hard on it. They tell you what you need to do. And if you do it, you're going to be way ahead of everyone else. So they're going to like you, and they don't like the people who are intentionally non-compliant in Philly.
Exactly. And that is definitely a competitive advantage, just understanding the rules and, getting the right legal counsel that kind of navigate you through that process. Philly is very block. You're right. It's very block by block, and it has a reputation, right? Deserve it or not, right? So, how do you manage a certain guest type? How do you make sure that you can segregate good guests from, guests that are going to throw a party at your place, right? What are the SOPs, the standard operating procedures we have for our team? When they analyze someone that books with us, are they going to be low risk, high risk, mid risk, and then like how do we mitigate some of those concerns, right? And we're not perfect, but we've developed over the years like certain principles that have allowed us to, I would just say, like, stay on good terms with our landlords, right? They know that we're not perfect, but we really try really hard, and we're very responsive. And when something happens, we're going to admit to it and fix it. And, for them, likewise, that HVAC problem, I think they had to spend 10, 20 grand. They had to fix it, but they did it over, and then they fixed the carpet. And I think that's just, I think if you're thinking about that business, like being someone that a landlord wants to work with, because you got kind of, if you're thinking about arbitrage, you got to think, right? Like, these are owners of these large buildings that are worth, $10, $20 million, whatever it is, right? Like, they're real business people. They want to deal with real business people too. If you're just like someone off the street that hasn't really prepared, it's gonna be hard for you to crack that. And even if you do, just be successful. A lot of people that started and just aren't successful long term because, and maybe some of that's just from the investment banking training, but it's just, and being older. I'm 44 years old, right? So I think that's a way of just like showing someone that, like, you're in this for the long term. Like, this is a fly by night kind of thing. Like, we signed 6-year leases, right? Like, we're going to be here.
Yeah.
We want to work with you. We want to grow.
Yeah, but I think it's like a great hedge for the landlord, because if they're still, say it's a 20-unit building and they're still mom and pop operators, who like operating a building, and you are renting half of the units, or five in there, they basically have those five covered. They know you're basically property managing in a general way your own thing, because you have control over the tenants. So they have a buffer in there. Whereas, their other 15 regular tenants are, complaining about a windowsill being annoying. It's a trade-off that's pretty smart, I think, for some landlords. The bigger
and,
ones.
and for, yeah, and I think it takes it takes someone that is willing to think a little bit outside the box, or just at least just like think more. I don't want to say out of the box. It's never that out of the box anymore, just given how popular short-term rentals are. But it's just thinking critically for themselves, right? Like, you have someone that is probably more financial backing, that is having cleaners in there every single, like 3 times a week.
Yeah.
They're incentivized to keep everything nice. So, these huge turnover costs. They're not, packing 15 people in there and their cat. That's going to destroy your, be a 10K turnover for you when you flip it. And long-term rentals, they just don't make that much money, right? You have a big turnover, like it'll suck out 2 years of rental, quote unquote, profit that you thought you made. So I think it's really, it has to kind of work for both sides. But like, we're in one building that has 210 units, and the building has 89, I think. I should probably give more round numbers. I don't want someone to kind of reverse triangulate where we are. I'm another building that's in the hundreds too. So, I think it's harder, but it's in the long run more profitable for everyone.
Yeah, I think even for the guests, so this is specific for Philly though, and then for other cities, if you're traveling, especially, I always just make the example of people coming from overseas. They don't really know Philadelphia. If you're traveling and it's a building that has 100 units, your safety value is much higher than going into a row house in Cobbs Creek or something, because you just know, like, hey, there's 90 other units here. So that safety factor is definitely helpful in terms of you not disappointing the clients when they don't really know Philly in general, right?
Exactly. And, Philly, like you said, is very, very block by block. So if you have, like, right across the street from us, there's a lot of new construction around where we are. And there's some really, really nice stuff.
Yeah.
It could be a difference of hundreds of dollars of rent right across the street. Someone, if you're not from Philly, you don't know, and candidly, you don't care, right? Like, it doesn't matter. It's just, I'm there for 3 days, and I'm going to see the Rocky Steps. I'm going for a conference. And who cares? But for me, it matters, right? Because obviously, if the rent's 10-50% more, that's a lot more flexibility I have on how I can price the unit. So there's a lot. Yeah, I mean, and it all comes, but it all trickles down to, like, you don't know until you do.
Yeah.
I just don't know.
But I mean, I think for people who are watching and they watch a bunch of content, they're seeing a lot of the curated experience short-term rentals, which I've had a lot of operators on. What you're doing, at least specific to Philadelphia, we'll get to Smoky Mountains, is a different type of short-term rental. You don't need to put in like 18 pinball machines and need a pickleball court, because these are apartments. So they're coming for a specific reason, like you said, conference, weekend, and they're going to be out most of the time. So these are kind of feel more like midterm rental operations to me, because they just don't need as many amenities other than just having stuff that people need. Am I right on that?
Absolutely. You hit it right on the head. It's less more about the amenities. I mean, we have amenities, like the buildings will have gyms and all that stuff, right? Like, you definitely want to have that, but you don't need to kind of go overboard with the pickleball courts, the pinball machines, the murals, like all that stuff, which there's a time and place. Like, we just bought this property, we're going to do all of that here because it's different. But, as an investor, you just like a good investor, you want different tools in your toolkit. There are situations where you want to amenitize. Yeah. In arbitrage, it makes very little financial sense. So it's very much of the, how do you scale? How do you get the right contract? It's a different. It might be short-term. It's still short-term rentals, but it's a different investor box than if you were to, like, we own 7 now, right? Long short-term rentals. Well, it's funny. We actually owned our first property we bought was a row house, very close to Cobb Creek. So I remember, and for folks who don't know Philly, it's where a lot of riots were during COVID. But it's funny. My wife and I and my mother-in-law were walking down the street one time. We were like just showing the house, and we were walking. Everyone was just like, on their porch, like, who the hell are these people? Like, what are they doing?
Hey, that's why Philly is so funny to me. It can go from like B to D in just like 5 seconds. You don't even realize it when you're walking, and then you're like, okay, now I understand what city data means. And you have to know that to do well in Philly. What was interesting, though, I think what you're saying is the model that you're running on these arbitrage in Philly, it really is operating more like an adjacent hotel, because it has the amenities of these buildings, but you have a full kitchen and everything, the things that, people like me never wanted to stay at hotels because I don't want to buy every meal out. It doesn't make any sense to me.
Right. You kind of get, I mean, that's for a certain customer type, right? But it kind of has things that a hotel doesn't have, and it has things that a house doesn't have, right? And it kind of it occupies this middle ground. And I think and there's a lot of demand for that. I mean, the data is very, very clear. People want these kind of accommodations.
Yeah.
They don't want just like a 100 square foot box in a hotel.
Yeah.
Right?
It's the worst.
They don't want to live. They don't want a house in Cobbs Creek, right? They're in the middle of nowhere. Like, I don't know anyone, but it's like, okay, there's a front desk, there's a garage, there's a gym, there's the view. I'm right next to a Starbucks. Like, there's transportation, like it's all, and you're kind of, you're in a new city, like you're around a bunch of people, you just feel safer versus like, where the heck am I, like, why am I in a SEPTA? Why are people looking at me?
Yeah. Hey, it's Jonathan. This is a new interlude, and I wanted to remind you that our website is up and running. You probably know that already. The guest pages are built out so you can find out all the information about all of our guests up until this episode by going to the guest pages at zenandtheartofrealestateinvesting.com. There's a ton of information there. And if you didn't know, there's also 10-minute clips of each episode that go up on my YouTube, and you can find links to those on each guest's page. And if you go to the homepage of the website, you'll see all the episodes, so you can go from the top episode all the way to the bottom in terms of numbers. There's a bunch of information that you can get there. I appreciate you listening. Let's get back to the show. Before we pivot to the more experience-based ones, what's your general like occupancy rate for these Philly ones? Because I think it's really helpful for people, because like I said in the beginning, I think if you're just a brand new investor and you're looking at short-term rental content, you're just going to see a bunch of like the super cool amenity-based ones. But this is like a really thriving business for you. What type of occupancy are you guys looking at across the board in Philly?
We've never over a rolling 3-month period been under 80%. So
wow, yeah, that's awesome.
Pretty good, yeah. I mean, like you get some. I mean, January, February aren't going to be great, but we've learned how to absorb that inventory in more creative ways so that we're not sitting on a bunch of vacancy. But again, it comes with experience. Like, we definitely weren't doing that first 2 years, and then we just learn how to optimize that.
Yeah. Okay. So let's talk about the ones that you have. Some in Smoky Mountains, and obviously you're up in New York at one now. So what are those like compared to these other ones? Because these ones are owned and are generally, I think, going to be more experience based and amenity driven for getaways.
You would think so, but
well, yeah, you haven't told me about all of them yet.
No, I mean, when we bought the first one September 2020, closed September 27th, 2020. The first one in the Smokies, the 4-bedroom, 4-bath. Bought it for $559,500. So it's a 4-bedroom, 4-bath. It's 3,600 square feet. There is a house that was sold a year ago down the street from, I mean, not even down the street, like a couple houses down from me. 1 bed, 1 bath, and a loft. It's like $550.
Wow. Yeah. I was thinking like 4 and 4 for $559 sounds pretty sweet.
I mean, it's just a different, the world's just changed in the last 4 years.
Yeah.
When we first got in there, we were just looking for something it was our first buy for short-term rentals. So it was a hot market, and it got way hotter.
Yeah. Yeah. You got into a great time.
Yeah, we got it in a great time. So we bought 6 over a span up. So we bought 1 in 2020. We bought 2 in 21. We bought 2 in 22, and then we bought 1 in 23. And the 1 in 23, it was a new build. We had it under contract in 21, so we had 21 pricing.
Yeah.
thank God, because if we paid 23 pricing, we would have been down 20% on that already. So that one like is, on a market value basis is flattish actually. So I think just sometimes being better lucky than good. What we were looking for, again, it's just like, I think, you got to have your conviction and biasy as an investor, like what works, but you also have to be like intellectually agile too. As things change, you have to kind of change too. Nothing is constant, right? There's certain things that are constant,
change,
like cash on cash, but like things should be profitable. You should, you need revenue, right? Like your revenue should exceed costs. Like that's always going to be like constant, right? But like things change, right? So how do you generate that revenue? How do you all that fun stuff? But so the 6 that we bought, we optimize for location. So they're all in HOAs, so there isn't a lot of space to amenitize these spaces. They're all in HOAs, they're all like small plots. But we wanted to make sure the HOAs were in good areas that had good amenities, right? They were close to what's called the Parkway, which is the main strip along the Smoky Mountains, if folks are familiar with that area. So that's what we kind of optimized for. We were fortunate that we didn't overpay. We were able to get almost all of them off market. We got the first one on MLS, all the other ones were off market. So we weren't engaged in these crazy bidding wars. And we got them in a low enough basis and low enough rates that as the market has shifted, they're still, I would say they're still highly profitable. That's profitable. I mean, there were some crazy numbers in 2021. Now they're just kind of normal. But we benefited from being able to strip out of our basis in the preceding couple of years. So
is the HOA been a problem for those 6 at all? I mean, for me, who lived in Florida for 14 years, if you think of HOA, you just want to jump out a window because it's not good in Florida. How's it been there?
It's funny. Whenever we're closing on the place I'm currently sitting now, at the last second, they were like, "Oh, there's an HOA." I was like, "What?" And it wasn't disclosed. It's actually just HOAs come in different forms, but I won't go off topic. In Tennessee, these HOAs are all short-term rentals. Like 100% investor owned. There's no full-time resident there. So it's all short-term rentals. So, on the typical HOA, I mean, you still have some of the HOA kind of headaches. Sometimes it's good and bad, right? Like the roofs have to be a certain color and shingle, right? But then it's like, maybe that's a better thing versus having 100 cabins with 100 different shingles or 100, that would look kind of odd. So there's some benefits to that. I got hit with a special assessment, so that wasn't fun for something else. So you take the good with the bad, but HOAs aren't an issue. And 99% of HOAs in Smoky Mountains aren't problematic. And it's just like, understanding the ownership base of whatever HOA that you're in. I would say that's the critical part. If they're 99% short-term rentals, like you're gonna be fine.
Is it weird though to be like in a development where you're in direct competition with everybody around you, like you're all trying to get full?
You would think so, but no, I mean, we have private Facebook groups for all the HOAs. It's actually very, very collaborative. Like everyone's like, awesome. Oh, hey, who's cleaner, electrician, need an HVAC person, who can cut the weeds, whose guest is hella loud right now, can tell them to be quiet. They're bothering my guests. It's actually been very, very collaborative. I can't speak for every HOA, but at least the ones that we're at, I think we'll see we're still doing okay. Like we're making money. So I don't know. I mean, maybe if times do get bad, they'll be more competitive. But it's been
I feel like you beat
nice.
Yeah, you beat the dip of the doom and gloom, the year prior with everybody just like who didn't know anything saying, oh, Airbnb is going to crash. No one's going to do it. And it's like real operators knew you would be fine. But it is interesting. That's pretty shocking to me that if everyone is a short-term rental owner, that they would collaborate. That's how I would be. I think it's great, but I don't think everybody else would think it would be that easy. It wouldn't be in Florida, but no offense, Florida.
My next door neighbor, she lives like an hour away. She, she needed a roofer. I was like, my roofer is great. You should just use mine. Who did the one next door? Like when I didn't have internet, she would like share her internet with me. When we first got there, we didn't have internet, and she was like, "Oh yeah, sure. Just here's a passcode. You can use it. Just like when you get yours, just don't tell your, just like or like the septic's backed up. Like let's pump the septic. I'll split it with you. I'll pay for it first. Send me a Zelle for the other part. So I mean, if something's just person to person too, just like hey, like there's enough business out there. Let's take business from other people, right? Like, if we do things well for us, like we'll be okay.
Yeah, and it's not like the Smoky Mountains is like a random town in the Midwest. Again, no offense to the Midwest, but it's not going to be, people are going to be going there all the time. So if you have a development of whatever, 10, 20, 30, and everybody's doing well, it's in everybody's best interest for everyone to do the upkeep on their properties. So it's kind of a can't miss area.
Exactly. But, finding the right HOA is important too, right? Because there's the one where I have a special assessment, it's like smaller, it's $1,800, so it's not the end of the world, but it's just kind of
that's great annoying. For a special assessment. I live in New Jersey. They're just crazy. But it looks like to me, just from going through these first two sets, that your strategy is pretty similar, although these are owned and Philly was arbitrage. You're not looking for the big amenities, super striped walls and things like that. You're keeping it kind of simple on the front end. So I'm sure the interiors are nice, but you're not like going overboard on that. You're location focused, convenience focused. Am I right on this?
Yeah, you are until this house.
Yeah. Well, this is your tester for maybe, the third sector, right?
Yeah. I think that, we think the market has shifted. You really, if you want to look, obviously we bought this house 3 months ago. It wasn't inexpensive. Prices are elevated, rates, highest rate we've ever paid, right?
Yeah.
Although we set a good rate. And in order to really achieve outsized performance in a true vacation rental, our thesis is you have to go over the top now. Like, we're going to be doing, we actually paid a real designer $15,000 to design it. I've never done that before.
Yeah.
We are spending we budgeted $22 a square foot for furnishings here.
Yeah.
And then that's plus labor, and then labor, all that stuff is like, we ripped out the flooring here because it was carpet so we're doing a lot, and we're going to put in a pool and a hot tub and a sauna and a putt-putt and all that fun stuff. And I think it kind of goes back to having first principles, but also being agile enough to understand kind of where the market shifts are and where the opportunities are. So, but for us, this is the first of this type of property that we're doing.
Yeah.
I don't believe the commodity type properties are actually going to be very profitable now, given price and rates. Like, if you want to make it, like actually profitable. And when I'm profitable, I don't mean like, we just make $100 a month. Like, that's not, I mean truly earning an economic return on your capital. And when I say capital, I mean time too, right? Just drove 3 hours up here from New York City. Like, my whole day will be spent here. Like, so it has to generate a real return on my time, my money here. And I think this, we think this will. But you never know, right? So we're going to do our best, and hopefully the short-term rental gods smile upon us.
Yeah, but this is really like a third version. This is going to be an amenities-driven version, and I agree. I do think, depending on location, I do think going up on I see most people having to spend between furniture and like design, 40 to 50 grand to be competitive right now. At a general scale of like, I don't know, like 1,500 to 2,000 square feet on a property. But then it's also, like you said, what are you going to put in the back? You're going to do pools, hot tubs, putt-putt, pickleball. There's a lot of options if you can get some land. And that's what I've been thinking about too. But again, like you were saying, prices are high, rates are high. And I guess I look and then I'm like, it's just not making sense yet. The sellers aren't in the area that I want to be in. Was that harder for you guys negotiating up there, or were you just kind of in on the process and waiting for the right one to show up?
This one we bought it at list price, so we didn't get a discount on it. It was listed at X, we paid X. I think for us here we looked for about 20 months actually before we bought this property. We had we've done this for a while. We have our viewpoint, we have our kind of process, and just check the boxes for that. And even though I think part of it's the opportunity is still a little bit of arbitrage opportunity to short term and the long term, right? Like, these are priced here as second homes, right? And probably a little bit of vacation rentals. Perhaps it's not priced for an operator that's been doing it for 7 years with 34 properties that has capital to invest, that sees the the benefit of this location here and this property that can put the capital in to invest and can generate a real return. Like I don't think it's priced that way, right? Because I'm a very specific buyer type, right? So
Yeah.
I think that's where potentially there's the opportunity here. But again, I'm humble enough to know that I can 100% be wrong, right? So we're going to do everything we can to maximize our chances for success here. But I mean, in no way is this like, I never think of it anything as a slam dunk, right? It's like we're going to be smart about how we furnish it, try to do it quickly and use the right vendors and all that stuff. But you got to take like I think a lot of people sit on the sidelines because of the macro trends, but it really is very micro, right? Like, yes, a lot of things worked in 2020, 2021. Like anyone could have made money, right? Okay, fine, right? And the people that did, great, good for them, right? But like, what is the now, right? What is the opportunity now? Is it fewer than it was in 2021, relatively? Probably, right?
Yeah.
But are there no opportunities? I would push back very hard on that point, that there's no opportunities out there.
Yeah, I agree. I think everything's micro and super local. And I think the more it should take 20 months to find the right property if you really want to, then maybe you can get 3-4 quicker. But I think if you're really focused on the locality of the investment, you can really start to figure out what's going to work on your own. You use the data as a sidecar, but I think if you're always focused on just the data, it makes it very hard to just make a decision, because you're going to take a data, then you're going to put it in a spreadsheet, then the spreadsheet's not going to work. Or if you want, you can just change a number in the spreadsheet and then it works. It doesn't mean it really works. It's easy to make a spreadsheet work for you. You just change a 1 to a 2 and hey, look, we're crushing it now.
You can torture a spreadsheet to do whatever you want.
Yeah, exactly.
But it doesn't. Yeah. But like we looked here because, we think we can, our goal is to get multiple properties in this location here. We don't want to, kind of earning a return on our time. We want to be able to not just have one, kind of multiple. And, we continue to grow our arbitrage business. We continue to, we've built a internal team that manages our properties. So, continue to grow, leverage the platform that we built, the knowledge and the experience. And, look, we have 2 very young kids at home. We have a 2.5-year-old and a 9-month-old. We're able to run this business remotely from where we live in New York City, raise our kids. It cash flows for us. We're able to continue to reinvest and buy more properties. So, we haven't even talked about the tax advantages of being an active real estate investor and how, you can take passive losses and, shield them against non-passive income, right? So there's a lot of pieces here that as you get deeper into anything, any vertical you get into, if you spend enough time in something, like, you're going to see the opportunities that most people don't see. And I think that's, and I just want to add another side point here. Like, I think that's kind of the tyranny of having so much information so easily accessible right now, right? It's like, it's so easy to think you're an expert at something because you watch some YouTubes and TikToks and you read some research reports. It's so easy to get like a high level topical understanding because all the information is so accessible. But it's actually it actually makes being a subject matter expert that much more valuable, because everyone is so spread so thin that if you actually have someone's subject matter expertise in a particular topic, like, that is relatively much more valuable than it was before. And that's something that, we really take home. We want to be experts in short-term rentals and experts in the markets that we operate in. I think that's how we're going to earn those returns.
Yeah, I completely agree with that. Before we hop off, can you maybe give a couple tips for people who are looking to start with arbitrage? Because arbitrage is a great idea because you don't need as much money down. But I've always said to other people, you always have more leverage when you have money and you choose not to use it. You use it smartly to get an arbitrage. But what are some tips you could give people who are maybe going to do the work to get set up like you did, take a little launch, and then how do they present that to someone to make sure that they're doing it, transparently in the right way, to start?
Yeah, I would say a few things. One is, leverage the information that's out there, right? AirDNA is a great resource for data. I would say 2, network with other short-term rental operators in whatever market that you're interested in. Yeah. There's a lot of Facebook groups. We personally built a community of 200 plus short-term rental investors that have learned from us on how to do it. So find whatever community that you're interested that speaks to you And I think that one, it's like, find a mentor, find someone that you identify with that, has similar life experience or is already kind of where you want to be, and learn from that person. I think lastly is just like, when you start making those connections, like, add value. I think a lot of times, a lot of people, at least the messages I get, a lot of like,
give me stuff.
Take. Yeah, give me, like, you kind of like, we owe, like, there's an obligation to share highly private information that has taken years and a lot of money and heartache to learn, and that somehow should be given away for free, right? And it's not that people don't want to share, but I think, asking in the right way, being appreciative, I think those I found working with people to be good ways to learn a new topic very, very quickly, right? Obviously, like, take what the desktop research you can get, find people that are already experts in there, and like, build your network by adding value in the way that you can, versus coming in there being like, give me everything. You're not going to be successful that way.
Yeah, that's so annoying. I agree with all of that. Awesome. Where's the best place for people to get in touch with you or find out what deals you're doing or coaching, training, whatever you're offering?
Sure. My wife and I, we share what we're doing in our business, our short-term rental business, both arbitrage and what we're buying, on Instagram. You can find me at Michael Chang BNB, MICHAEL CHANG BNB. The same handle on TikTok, YouTube. So if you have any questions there, feel free to send me a DM. Happy to talk to you.
Yeah, but make it a good DM. Don't just give me a gimme DM. Yeah, and honestly, like, I mean, obviously, I know.
Tell me a little about yourself.
I know tons of investors, but I use Instagram as a vetting mechanism, and I watched you for a while, and I was like, oh, this guy really knows what he's doing, and the information that you're presenting is straightforward and helpful. And that's personally, we were talking before why I created the podcast or why podcasts are relevant, but I'm looking for people who, like you said, you're willing to give out this information because it's on your own terms. But if you're going to come in the DMs or you want some mentor or assistance, it needs to be a win-win, because that's another time spent that you would spend. And none of us want to coach or help someone who's not really appreciative of us saying, hey, we're going to spend the time this way. What's in it for me?
Exactly. You hit it. You nailed it on the head, my friend.
Awesome, man. Well, I'm really glad we got in touch, and good luck on this project. I will keep up with you to see what happens with that. It should be an interesting one. But thanks for spending the time today. I really appreciate it.
Appreciate it, and thank you for your support. I'll be posting. You can't see it on the camera now. There's about $40,000 of the furniture here, so I'll show you what that looks like.
Yeah,
in boxes.
Yeah, I saw it all in boxes. Awesome, man. All right, that was Michael Chang. I'm Jonathan Green. We'll see you next episode. Thanks for listening to another episode of Zen and the Art of Real Estate Investing. If you've been sticking around the past few weeks at this point in the show, you know that I'm dropping previews of the next episode. So here we go. Next episode 163 is Grant Franke, the unlikely investor, which is him, but also the title of his book about a path to financial freedom through real estate, how he went from the railroad to the investment road and every stop in between. Can't wait for you to hear it. And I'll see you next episode.